today we're going over my 2024 trading strategy. But before we get into my strategy, make sure you check out my new free Discord down below. Leave a comment down below if you got any questions. So yeah, let's get straight into it. So number one, first thing we want to look for is a key level of either support or resistance. The second thing we want to look for is some smart money concepts, whether that's a drawn liquidity being taken out, a fair value gap being respected, held, broken through, used as an inverse, a breaker structure, most likely on the higher time frame, to figure out what type of trend are we going in. So like if the 4 hour and the 1 hour is bullish, then we want to look for a long, but if the 4 hour and 1 hour is bearish, then we're looking for a short. And then I also like to use the power of 3 concept for an entry, and then we can also use Fibonacci retracements. Alright, before we get started, I just want to shout out Justin Whalen / Tactical Traders. This type of video format / idea is the same as his. I'm just using my strategy. Alright, let's get into it. Okay, so this is our bullish model. So let's just pretend that this is the 1 hour chart. Right here we just broke structure to the 1 hour, and right here we just broke structure to the 1 hour again. So we're obviously bullish. So now we know that price is bullish. What's the first thing that we wanted to look for? First thing was that key level of support and resistance. So we can see right here that it's used as resistance, that it gets flipped into support, and now it's bouncing off this key level once again as support. So cool. First thing ticked off, we got a key level. Second thing we look for is this smart money concept. So you can see that there's clearly a level of buy side or sell side. There's clearly a level of sell side liquidity right here where it takes out. And you can see, if we zoom in even more, that you get let's just say we're on the 5 minute now. We have a 5 minute break to the upside, and it retraces into a 5 minute fair value gap right there. Something else I do like to look for is after we break structure on the 5 minute right here and retrace into this 5 minute fair value gap, I do like to look for 1 or 2 more things, which is a 1 minute break, 1 minute fair value gap, just so all the time frames are lining up with me. Yeah, and then finally we like to look for that optimal trading entry. So you just draw that from whatever swing low you like to whatever swing high you like, and it's in between the yellow to blue range. Ideally you want to see it touch the blue line. So in this example, let's just say it did touch the blue line, broke structure on the 5 minute, created a 5 minute fair value gap, retraced into that fair value gap, gave us a 1 minute break, 1 minute fair value gap. You would want to long to this level of buy side up here, because remember we were bullish on the 1 hour. We got that key level, and you would have your stop loss at this low, take profit at this high, catching a nice little trade. So yeah, that's my strategy going into 2024. Let's hop into the market and see what we can find on the chart. It's nighttime. I'm editing my video, and I just realized I forgot to do a bearish version on the line graph to show you guys. So I'll just show you what that looks like real quick. Alright, looking at the market, let's just say we're on the 1 hour again. We're obviously going bearish right here, and we broke structure again right here. You can then say that this is a key level because it's used as support and resistance once again right here. And then it would be even greater if we had a big 1 hour or 4 hour fair value gap that it taps into right here. So we got a key level, we got some smart money concepts in there already. And then you could say that we sweep a level of buy side liquidity right here. I'll just get rid of the key level, but remember it's here, because yeah. So yeah, we take out that level of buy side, and we create a high and a low. We then internally sweep ourselves of the high that we create after taking out buy side, and then we get a clear breaker structure right here to the downside. And then we want to look for that fair value gap to enter on. And obviously that 5 minute break, 5 minute fair value gap, 1 minute break, 1 minute fair value gap. And then in terms of the optimal trading entry, you want to draw it from this swing high to this swing low. And as you can see, it clearly taps into it whenever. And yeah, that's the bearish model. Sell right here, stop loss at this high, target at this low. And yo, that's what we're looking for our bearish model. Alright, so this is the first example. On the daily, we have a big daily fair value gap. We did break structure to the upside bullish, but me personally, I thought that we could look for a short to retrace into this big daily fair value gap. Going on to the 1 hour, we see that price is clearly at what? A key level of resistance right here. So we have a level of resistance, and we can see there is a clear level of support down here. You can see it bounces here, bounces here, bounces here, bounces there once again. So cool, we have key levels ticked off. What's the next thing we need to look for? Smart money concepts and an optimal trading entry Fibonacci. I'll do the OTE Fib last because it can be a bit confusing, but on the smart money, we got a clear 1 hour break to the downside right here off that low, and we clearly made a 1 hour fair value gap. Cool, so now we have a clear level of resistance. We clearly have bearish confluences that we're going to the downside because we have a 1 hour break and a 1 hour fair value gap. What can finalize this? An optimal trading entry. So you can either draw it from this swing low. Oh, that's an EQ. You can either draw it from this swing high down to this swing low, or you can draw it from that swing low to that swing high. So either way, either swing low works, and your optimal trading entry would be inside of the 1 hour fair value gap, and it's not just the blue line, but anywhere in between the orange to the blue is an optimal trading entry. So now what do we want to see? Well, scaling into the 15-minute, you can say that this is a buy side liquidity draw. Cool, so we have a clear level of buy side and a clear 1 hour break to the downside. What else would make this more high probability? Well, as you can see, we have a clear internal sweep right here. Now we just want to see price retrace into the 1 hour fair value gap and inside of the optimal trading entry. After that, what do we say we want to look for? A 5-minute break, 5-minute fair value gap, 1 minute break, 1 minute fair value gap. So we continue price along, it taps into it. Scaling into the 5-minute. There are a few 5-minute fair value gaps like right here that you could enter on. You probably would have been able to enter on this 5-minute fair value gap and target this low, but we're looking for the most high probability entry. So you can clearly see we take out a level of buy side liquidity inside of the 1 hour fair value gap, inside of our optimal trading entry. What do we now want to look for? We want to look for a 5-minute break and a 5-minute fair value gap. Well, we can clearly see that there's a 5-minute low right here. So if this breaks, all we need is a 5-minute fair value gap. Sweet. And that's been broken. So we got a 5-minute break, but we don't have a 5-minute fair value gap bearish. We have one right here, which is bullish. Cool, we can now use this as an inverse fair value gap. Now you wait for price to retrace into this inverse 5-minute fair value gap. But I would like to wait for a bit more confluence, like a 1-minute break, 1-minute fair value gap before I enter. So we retrace into the inverse fair value gap. Now what do we want? We want a 1-minute break, 1-minute fair value gap. What does price do? Price plays around, doesn't break structure just yet. Boom, we got to break a structure. Now what do we want? We want a 1-minute fair value gap bearish, because currently we're holding a 1-minute fair value gap bullish. So we can't enter straight away until we get a 1-minute fair value gap bearish. Wait for price to play out. Boom, we break structure right here, and we have a 1-minute fair value gap right here to enter on. If price comes in there, I'm straight selling. Price doesn't go into there, but it continues lower. We want a clear 1-minute fair value gap to enter on. Okay, nice. We have these fair value gaps. If price comes in here, we can enter. Boom, price flicks it. You're in shorts. Oh, shit. Where is your stop loss? You can either do it at this high or the most prominent swing high. Let's just say the most prominent swing high. And me personally, where do I like to target? I like to target a 15-minute draw on liquidity. So it would be this internal sell side liquidity. Looking at that trade, you get a 1.11. It's not the end of the world. If you want to have a tighter stop loss, you can maybe push it up to a 2 risk to reward, but I like to let my trades have some space to run. And yeah, let's just see what happens. So price nearly hits our take profit, Cool, we move our stop loss to break even. Where is our next take profit? Anywhere inside of this 15-minute fair value gap for me. You hit it straight away. Where's our third take profit? You can either do this draw on liquidity, or you can do the level of support that we marked out before. So next take profit, we'll just say, is the support. And where's your final take profit? Higher time frame, higher confluences. We said we wanted it to retrace into that big daily fair value gap that we marked out before. So what does price do? Plays around for a bit, plays around, chops, boom. Final take profit hit. Nice 80 pip trade. Let's just go over it once again. First things first, we had the key levels, support and resistance. Where was our resistance? Up here. We had a level of resistance right here. Where was our level of support? Cool, it was right here. We clearly have a level of support. Next thing, smart money concepts. What confluences do we have that are smart money concepts? Well, we have a buy side liquidity sweep. We have an internal sweep. We have a 1 hour break, and we have a 1 hour fair value gap. Cool. Do we have an optimal trading entry Fibonacci? Yes. From this swing low to this swing high, or this swing low to this swing high, creates an optimal trading entry that lines up perfectly within the yellow lines to this yellow line, and the blue being the perfect range. Then finally, what do we have? We have a buy side liquidity sweep. We had a 5-minute break. We had a 5-minute break right here, an inverse 5-minute fair value gap. Somewhere throughout here, we had a 1-minute break, 1-minute fair value gap entry, and bam, you hit all the way down to that big daily fair value gap. So yeah, that is the way I like to trade using the strategy. A few more examples in the market, and alright, example 2. So let's start with the Fibonacci this time. You can see from this swing high to this swing low, down here, we're clearly holding this optimal trading entry. So yeah, from that swing high, from this swing high right here, drawn down to this swing low, you can clearly see price has retraced into this optimal trading entry, and it has not closed above it, but it has wicked it. So cool, we got our optimal trading entry. What else do we have? We have this high time frame 4-hour fair value gap, and we clearly have a level of buy side right here. I'm going to delete the optimal trading entry, but just remember that it's there. I'm just getting rid of it because it's kind of hard to see with that shit in the way. So you can say that this is an equal high, like, buy side liquidity from this high and this high. And what could you also say about this area? Me personally, I think that this level of support, this level of resistance, and this level of resistance once again makes this area a bit of a key level. So we have a 4-hour fair value gap, we have these equal highs which have just been taken out, and then we did just break structure to the downside on the 1 hour. Cool. What do we also just do? We internally sweep ourselves once again, but we are holding a bullish 1 hour fair value gap. So what do I want to see? I want to see us create a bearish 1 hour fair value gap for at least an entry. So yeah, price breaks strongly to the downside, and as you can see, we create a big fat bearish 1 hour fair value gap here, and another one right here. Once again, we break structure even more, so I'm bearish now because we broke structure to the downside on the 1 hour, and we disrespected this 1 hour bullish fair value gap after taking out equal highs slash key level slash 4-hour fair value gap slash an optimal trading entry. So we got a key level, purple line. Smart money concepts, we got a 4-hour fair value gap, equal high liquidity being taken out, internal sweep, 1 hour break, 1 hour fair value gap, and we're in our optimal trading entry. Cool. So now what do we want to look for? We want to see price retrace into these fair value gaps. Give us a 5-minute break, give us a 5-minute fair value gap, and that's our entry. So what does price do? Price rallies down even lower. Remember, our first take profit will probably be the sell side level, or originally it would have been inside of these fair value gaps, but they've been filled. So our first take profit is sell side liquidity right here. So we want to see it retrace back up, possibly even. If this is going to be the main low it makes, it could possibly even retrace into another optimal trading entry inside of here. And if it does, look where it is. It's in line with that key level. It's in line with the EQ of that 1 hour fair value gap. So let's see what it does. Shit's lagging. Taps into the first 1 hour fair value gap. Would I enter here? You possibly could, because you get a 15-minute break right here. And then straight after you break to the downside, you tap into that 15-minute fair value gap. Let's see what happened if you would have entered. You get another 5-minute fair value gap. What do you want to look for? You want to look for that 1 minute break, 1 minute fair value gap. But here's the thing. if I scaled into the 1 minute and I notice that we have this 5 minute right here, and I see it get absolutely disrespected and turned into an inverse right here, that's a big no-no for me, and I'm not looking to trade. As well as now we're holding a bullish 5 minute fair value gap. So what am I thinking? I think the draw is going to be higher, and I'm not willing to enter until we either take out this level of sell side liquidity, or we tap back into our original 1 hour fair value gap entry, which is also in our optimal trading entry. So play along, play, boom. What happens? Price goes into our key level once again, goes into our optimal trading entry. Look how perfectly it wicks that. This is on the 5 minute. There's so much precision on the 5 minute. Even on the 1 minute, it wicks it. Fills the EQ on the 1 hour fair value gap. Taps into our optimal trading entry. Taps into our key level. Now, I'm not willing to enter straight away because we have had a bit of a bullish rally up here. We broke structure on the 15. We've got a big 15 minute fair value gap. We broke structure on the 1 hour. I want to see at least 5 minute break, 5 minute fair value gap, 1 minute break, 1 minute fair value gap before I enter, and also disrespect some of these bullish confluences. So what happens, we can see that we create a 5 minute low right here. We want to see this line get broken below. Nice. We close below it. Now what do we want to look for? We got a 5 minute break. Now we just want a 5 minute fair value gap, 1 minute break, 1 minute fair value gap. Price continues even lower. This is now an inverse fair value gap. Possibly you would enter on this, but me personally, I would think it's a bit dodgy because we are still holding this massive 15 minute bullish. But if you're a risky person and you think that this is a good enough model, in which, in my opinion, it is a pretty decent model, it just has a bit of opposing bias confluences. So yeah, if you want to enter straight on this inverse, go ahead. And let's see how it plays out. Price comes into it. Cool. We came into our inverse. Now we have a 1 minute break. And on any of these fair value gaps, you could enter a short if it retraces into it. Price just continues lower. Continues lower. It fills these two, but I'm a stubborn person, so I'd probably be like, I want this one to get filled because I just see, like, it's just such a massive fair value gap. But yeah, you could enter there, but and price continues lower. So realistically, you should be entering on this, or you can wait till here, but that's even lower. But you never get that entry apparently. So let's just say you entered here, because you should enter whenever you get an entry. You shouldn't wait for the perfect entry. Whenever your confluences are met, you should just enter. And what do we want to target? You can either target the bottom of the fair value gap, but that gives you a shitty risk to reward, or target that 15 minute draw. Target this level. Target that level. I'd just say target here, bro. It's basically equal lows. So you got equal lows here. You got sell side right here, and then zooming out. Do we have any key levels around here? You could say that this sell side is a key level because it's used as resistance and support, but I wouldn't count on it. I would say our biggest key level is probably right here because it's used as resistance, support, resistance, supporty resistance stuff. So yeah, that's your trade. Yeah, we were looking to target this 15 minute draw. Let's see what happens. We also create another 15 minute fair value gap right here. So maybe you want to enter or add more positions on there, but me personally, I think one's enough. You could enter more on that. Yeah, whatever. Yeah, so we got that 15 minute drawn liquidity that you want to target. Boom. Price smashes it. Move your stop loss to break even. Where's your next take profit? This low. Boom, you smash it. Where's your next take profit? Sell side liquidity. Boom, you smash it. Nowhere near your break even. Look how far up your break even is. Where's your next take profit? Either this liquidity here, or you can do the key level. Me personally, I would probably take one off at each point on liquidity. Next take profit hit, smashed. You're getting 77 pips. Price is now starting to chop around, probably filling some orders to either send it higher or lower. Bam. Next like 2-3 take profits hit. You're looking at nearly 100 pips. Where's your next take profit? Right here. See what happens. You're probably gonna get broken even at this point. Oh no. Price just comes up. Here's another thing. There is such thing in the market called accumulation, and you can see price accumulates orders here, breaks down, about plays off this key level, retraces into accumulation, and then you hit this take profit at 121 pips. Nowhere near your break even. You can either close full here or whatever you want to do, but no, I think it will nearly end up hitting sell side. 200 pips. If you held it for, how long is that? From the 27th to the 30th. For 3 days, if you hold it for 3 days, you're gaining 200 pips. I know that this is a bit of a swing trade, but okay, so using this key level of support and resistance, which was support, resistance, resistance, now using as resistance here, and then you broke through it and used it as resistance once again, using smart money concepts, which was this 4 hour fair value gap, this draw on liquidity of both of these equal highs, using a 1 hour break, a 1 hour fair value gap, and then an optimal trading entry as well. You could catch a 200 pip move within the next 3 days. Now, I'm not a swing trader, I'm a scalper, but if the opportunity prevails itself to give me a trade like this, where I can catch it using smaller time frame conferences to catch this massive move to the downside, which no scalpers are hitting, bro, that's cracked. The strategy's cracked, bro. I don't care what you trade, but like, if you mix these 3 things together, you can just catch insanely fat trades like this. But yeah, let's go on to our final entry. We did one on GU, we did one on Euro JPY. Now let's go on to GJ. Alright, let's have a look at GBP JPY. So we clearly have another daily fair value gap. All the trades I'm showing you are shorts. This does work for longs as well, but all the examples that I've literally just found are shorts. But maybe we'll look for a long the next one. But yeah, we can see that we clearly take out this level of buy side liquidity, and we can start to look for a reversal into this daily fair value gap. On the 4 hour, we're clearly holding this 4 hour bearish fair value gap, and you could possibly say that this buy side level of liquidity is a key area of resistance. So yeah, we got that buy side level, which is also a level of key level resistance, broke through it, are using as resistance. We're holding that 4 hour fair value gap. If you look from this swing high to this swing low, you can see that we're clearly tapped into the optimal trading entry, as well as we're holding this bearish 1 hour fair value gap, and we clearly break structured to the downside on the 1 hour right here. So we retraced into a 4 hour and a 1 hour fair value gap, retrace into the key level, retrace into our optimal trading entry, retrace into all that good shit. Now what do we want to look for? We want to look for that 5-minute break or that 15-minute break to the downside. So let's just make this clearer. We know we have that optimal trading entry. We know we have this key level right here. We know that there's clearly a 4 hour fair value gap right here. What are we looking for in terms of smart money concepts? So we know we're holding that fair value gap. You can clearly see we internally sweep right here. What do we now want to see? We want to see this placement past this low. So looking at this on the 15-minute, you can clearly see we break structure on the 15-minute, showing that we are bearish on the 15-minute, and we're clearly holding a 15-minute fair value gap right here. 5-minute, you can see that we retrace into this 5 and 15-minute fair value gap. What do we want to look for? A 1-minute break, 1-minute fair value gap to the downside. You get a clear 1-minute break right here, and then we have a 1-minute fair value gap that you could enter on right here. You don't get a fill there. Price rallies down even lower. The most recent fill you could get is this one, but at that point you've already hit this internal sell side liquidity sweep. So I don't know about that one, eh? You could enter straight away on this 5-minute fair value gap, but that would be slightly less confluence because you've already hit this drawn liquidity. Your next take profit would be this 15-minute low right here, then this one right here, and then you got a big 15-minute fair value gaps one which you could enter anywhere in between, and then obviously you got the sell side liquidity level plus your daily fair value gap. So let's say you enter straight away onto inside of the 5-minute fair value gap, which was, I think it was here. So yeah, let's just say you enter here on the 5-minute fair value gap. Take profit 1 is at this low. Stop loss is either this high or 1-to-1 or here. And eventually take profit 1 is hit. You move your stop loss to break even. Potentially you get stopped out here, but hopefully not. And then next take profit is right here. You wait for price to keep playing out. Keeps chopping around. This whole range is just consolidation. Boom. Your next take profits hit right here. Next TP either at the start of here, or you could do EQ. You probably do one at either side. Take another take profit at EQ, and actually you don't hit it, but bam, there you go. Hit your next take profit at EQ. Next take profit at the bottom of the 15-minute fair value gap down here. Hit that, and then your final take profit is at the daily fair value gap. And you hit it. So that's another, how many? 76 pips on GJ. This is GJ. It's super volatile. If you hit 76 pips, that's basically like as big as the other ones. That's at Tuesday, and you'll hit it in a week. So this is low-key a bit of a swing trading strategy. To be honest, I don't really hold trades for weeks, but maybe in 2024, if we look at these confluences, look at this strategy, we might be able to find some good swing trades. Something you guys should know is that the market changes as time goes out throughout the years. You have to change your strategy. I remember at a certain point throughout the year, I was just trading liquidity sweeps during London time, and then it evolved into retracing into accumulation. Now it's this strategy of smart money concepts, support and resistance, and an optimal trading entry. That's the thing with trading, guys. You need to be able to evolve in trading. You need to be able to find new strategies. You need to be able to look at the market and figure out what's happening inside the markets right now, what strategy is valid and usable in the market to be able to find an entry. And the strategy that I see going into 2024 is this one. So hopefully this has helped you out